Okay, good morning and welcome. My name is Khan, and as promised, I will record the Q&A session. I have several questions. Let's start with the first. So GenX6 has some questions about the MACD and how to use it, and what's the difference between having the MACD and normal moving averages on the chart. Let's see, we choose OCGN, and as you can see, I have my normal EMA 20, 50, 100, and 200 on the main chart, and below I have, besides several others, also the MACD. So the MACD in general is a trend indicator, so it gives you confirmation if the trend will continue, maybe how strong it is, and can help you in a decision-making progress if you take a trade or not, or when to end it. And we have, let's say 4 states when you're looking at the MACD. So for a second, we ignore the main window, just looking at the MACD. So in general, you have a baseline of 0, and when the both lines, the signal line and the MACD, are above, it's bullish, and when it's below, it's bearish. And with my trading view setup, I try to give every indicator a similar color. So all red ones are the main indicators, and the green or the blue ones are the most of the time the signal lines, but the accompanied lines. So yeah, above bullish and below bearish. Then you have crossovers inside these 2 parts. So we see here it was bullish, it barely touches the bearish context, but here we have a bullish crossover. So the MACD, in that case the orange line, crosses over the signal line in green, and it's above 0. So we have 2 bullish indicator patterns. And as you can see, of course, the stock price jumped very high, and then a sell-off started, and we are still in bullish context. So if we would have bought in here, we would still be massively in profit. But now we have inside the bullish context a negative, a bearish crossover. The green signal line crosses over the red MACD. So then we have a decline of the price, and here you can here we have a small slide bullish crossover. As you can see, a spike, and then it enters the bearish context, because we have an indicator below 0. And again, you have here a bearish crossover. So green line crosses over the MACD, and we are finally completely in bearish context. So we have a double bearish indicator. And so now we are in a falling price context. And inside this bearish context, you can, of course, have some bullish crossovers. As you can see, we have a small bump. But in general, when you're thinking about starting a trade, I would always wait for a crossover above 0 and a bullish crossover MACD over signal, like here. Doesn't matter if you see this a bit too late, but when you have a double bullish confirmation, if you want to go long, would be the best starting point of a trade. So in context of the moving averages inside my main window, these are used to look at the price action and the chart itself. So the MACD only gives me confirmation after I've looked on my main window. So let's see. We have here the price is very low, but from my pitchfork, it's around the trend line. So I might think, and I think that was my thought process as I put OCGN onto my watch list. Well, with enough volume, we can see a push, and you can see here starts a bullish crossover. Ideally, so I have, if I want to have the full confirmation, I would have waited until it crosses above 0, and then I would start the trade. Or if I'm more risky, I could start it here when the bullish crossover started. Okay, that explains a bit. Next one, or next 3 are for marcote. How to choose a stock in the first place. So I'm watching a lot of YouTube videos during my travel from Zurich to Constance and back. And if I find interesting analyses from YouTubers, or I've read some news articles of the sectors I'm interested in, I will check these out and put them at a first on my normal watch lists. And then during the weekend, I will go through them. But during the week, it's usually collecting some stocks inside a larger watch list. And it can happen that I've read something in other Discord servers, Reddit, yeah, not that much interesting analysis, but sometimes, yeah. Or I've read a news article about a possible news catalyst or whatever. And then the stocks go onto my watch list. And the process during the week and will usually be I've checked the screener on Finviz. I will come to that in a later question. And prior to that, I check the possible sectors that will rise, or that they might rise in the upcoming week. And then I adapt the screener settings to these sectors. And then I would go through the weekly watch list and look at every chart and throw out every stock when where the chart tells me that there is no possible trade for me. And then I have some larger lists from former plays or from general stocks I'm interested in and watching, or possible older scalping stocks. Yeah, and sometimes I go through older watch lists and check the plays that I've not chosen at these times, if they're interested. So then I build my pre-watch list, and the red ones are then the final ones. But I've looking at everyone, every stock, and then I will continue my financial analysis. We are Finviz, Seeking Alpha, Yahoo, whatever, and only if both parts are reasonable, so the technical analysis and the financial analysis, then I might pick this stock for my watch list. Yeah, managing watch lists, I think I explained that as well. So my main watch list managing program is TradingView. For the daily check about my holdings and watch lists, I use TraderFox. It's a bit an 80s, 90s style website, but I find it very, very helpful to have all my holdings, all my watch lists, different indexes on one place. And I can choose what exchange the equity or the index will be traded. So I have I have my German ones, but then I have also the US ticker inside it, and I can check both. So I have a good understanding how the stock will will be traded during the European market, which is then after 10 a.m. the pre-market of the US. And yeah, find it very helpful. I've used the free version, so you don't have to pay, but you have to create a profile. And I found nothing better to have all interesting stocks on one place. Very, very nice. And usually you find every ticker that you're looking for. Yeah, okay. What are typical beginner mistakes when performing technical analysis? I think putting too much indicators on the chart. So I'm guilty of that as well. So you see a lot of colorful lines and patterns, but I narrow it down, and if I scrape the drawings, yeah, we finished that. So if I delete the drawings, my main indicators are the 4 EMAs, the Bollinger Bands, and the MACD, stochastics, my squeeze monitor with the ultimate oscillator, average true range, and RSI. When you only have a free version of TradingView, you can use 3 indicators. So personally, I would always choose the Combi EMA. Usually a volume. I've learned yesterday that my side volume is not included in the free version, so you have to stick with the normal one below here. And yeah, whether Bollinger Bands or RSI, you can also swap. So I have at the moment 4 different layout setups. Most of them are for SPY. So here's the Ichimoku style cloud indicator. That's a bit advanced and complicated. For now, you don't have to bother with it. And it's the normal SPY one for me. Yeah, I think not that complicated. And here I'm trying the strat. So I'm using the strat indicators that are published by one of the coders of the strat, and but I'm learning this and trying to, if it fits into my trading style. So yeah, normally I use this one, and that you are also knowing from my watch lists. So too many indicators, then focusing too much maybe on pre-market and after hours trading. So the volume isn't there in simple terms, and you may have a wrong direction of the stock if you focus too much on pre-market and after hours. Maybe not respecting all-time highs and all-time lows. So we tend to think that the stock will rise forever, but you need to have a broader picture. Maybe zoom out, go on the weekly and the 5 years, and yeah, check the former prices. Also with the charting, check what happened there. Maybe so in 2018, maybe a stock split, maybe, well, I don't know, but you have to check it. And now we are really below the former highs, and you have always to check if is your price target for a specific stock reasonable, or is it a dream of yours and some Reddit folks or some analysts that might reach $35 again. Yeah. And well, maybe also if you use the RSI, and I think that's the most used, or one of the most used indicators. People think, let's go on the 4 hours. Yeah, when it's here, or here, let's say here. So we have a highly overbought stock, and usually you would say, okay, we will soon have a cool off and a sell period, but stocks and indexes can stay oversold and overbought very, very, very long time. It's not that then stock with a RSI of 80, 90 plus immediately needs to drop. And I think that's yeah, maybe also something you've maybe read before on a Reddit post, that yeah, it's oversold and you have to check it, and there will be a swing opportunity. But it can stay that way for weeks, months, or whatever. And that's why I also try to give other indicators inside my technical analysis. So I always check the RSI, I check the MACD and the stochastics. And I'm just thinking I forgot about the hidden divergence in answering Jen's question. Okay, let's go back to the MACD. So divergence, I think I will do another topic about that. Happens when the indicator high lows doesn't match or they won't match with the underlying price action. Let's see. Yes, here. So here we have minus 0.22, and here is the next low. So the price is lower, but the MACD is higher. And that would also indicate an upcoming reversal, because we have a divergence inside the MACD. I've posted some screenshots of my Notion, yeah, what is this, colloquium or whatever. So I've analyzed all videos that I've watched and write something down, and I'm beginning to screenshot it and put PDFs of the larger ones inside the Google Drive, and I will share you the link. So you have all my write-ups and can check it out or read it, or if you have a question, maybe check that first. And I have to check the divergence. Yes, here. So sorry about that. That's a quick cheat or cheat sheet about divergence, this time with oscillator, but you can replace that with stochastics or MACD, doesn't matter. So here you see the 4 different types: regular, bullish and bearish divergence, and hidden bearish and bullish divergence. And you need to check that out if you want to use the MACD or the stochastics or the RSI to the full potential. Because these divergences will indicate also a possible reversal area. Okay, I think that's it, this part. Yeah. 12 Bravo, asking about my screener. So I have a huge number of screener in Finviz. I have different ones. It depends what I wanted to check. So the most used in the past is an earnings drop. Just simple. I can always add more, but so the earning happened in the past week, and we have a minimum minus 10% performance in this week. So usually a drop after the earnings. And I might check these out. These look both good, to be honest. So I might check them out later. Yeah. Then I have cheap optionable small caps. So looking for wheel candidates or yeah. Usually as a pre-screening for my watch list, I go through these. So we have 6 screeners, daily and weekly unusual volume, parted in small, medium, large caps. You can debate if 100K is enough. Sometimes I go to over 300K average volume. And then you can check it out. I think my most, no, it's also 100K. Let's check what I've used normally. Yeah, I think that's my most complicated one, and I have no stocks shown. Also, no, and an earnings thing, if I change that, yeah, I have some. Okay, so we have gap. Here I've chosen over 400K. I don't want to have slow movers, so over 0.5 average true range. That's a possible setting. Or I'm playing also with some settings here. I'm trying to have a complete bullish setup. So 200 EMA, 50 and 20 EMA are also all up. And you can see I have very bullish stocks, maybe for a possible short position or for a continuation play. Yeah, I have really many screener settings. You need to, or we need to have another question and answer session to check that out. Oversold reversal, that's from the RSI, also a good one. So possible downtrends that turning possible swing opportunities when we have a highly oversold RSI, and it could also be possible reversal area. And so I'm a swing trader by heart, so I'm looking for possible swing trades basically. And yeah, okay. Yeah, genau, the gap over 5%, and yeah, I guess we'll have a lot of results with that screener. So maybe you have to check that a bit lower. Let's see. So Kubik's question is a bit complicated because it resulted from market maker discussion we've had. We can't really see what market makers do. If you have access to level 2 data, you see the order books, but they can also be faked. Yeah, it's a bit hard to see. I would suggest that the real supply and demand is best seen when you can check the recent offering prices of a stock. So especially when it's only for institutional holders, because these are the price areas where the money or the big guys bought in, and so they won't always have the price above their buy-in. So usually the price will move to these past offering price ranges. And for possible supply and demand areas, I've watched a video in the morning. Maybe that will help. Let's see. Once, and then, yeah. So it's the notion is about price action, day and swing trading tips, and these are two. There are more topic points, but 2 points where you can see a possible supply or demand area inside a candlestick chart. And so when you have a highly uptrend and then a sharp counter move, and then it's retested again, forming in that case nearly a triple or quadruple top, you can mark this zone where the sharp counter trend started and identify it as a possible demand area. And yeah, when you have a lot of swing highs and swing lows, that may indicate also a counter trend. The reason behind it, when you have identified such a zone and it's retested multiple times, it's behind the scenes, in that case, a bearish big guy or several market makers couldn't sell all of their shares in this touch point and this touch point. So they need to move the price several times inside their area to sell more shares. So they will artificially force, without knowing, the retail traders to sell off and buy in the underlying stock, and always try to manipulate the price back in their selling or buying area, in that case selling area, to get rid of their shares. And once they are done with the majority, they will drop the price. So that's also a possible identifier for such areas. Okay, I think that's it. Right? Yes. So you are hopefully satisfied with my explanations. You could hopefully understood me, and maybe we will continue such question and answer sessions. If they are useful for you, let me know. And if you have additional questions, post it in the Discord. Discord. Okay. Thank you. Have a nice day. Have a nice weekend. Bye-bye.